This is a preview for the New Zealand RBNZ interest rate decision that's coming up on the 22nd of February. It's on Wednesday and it's 1 a.m. UK time. Now, expectations are quite clear for the RBNZ. They're expected to hike by 50 basis points. Short-term interest rate markets give it a 99% chance of that happening. And short-term interest rate markets are seeing a terminal rate of around that 5.30, 5.35% region. And the November interest rate meeting had a projection of 5.5% for the third quarter. I don't think they'll necessarily get there. Certainly short-term interest rate markets are not thinking they will. And there is a chance that this could be, very close to the final interest rate hike for the RBNZ. There's quite a lot's changed since the last November meeting. So we had that very sort of strong pretty strong employment print, which was just before the meeting. But after the meeting, we have had some inflationary PPI pressures falling down. We've seen building permits falling, business confidence dropping. Retail sales was not bad at all for the year on year. But the quarter on quarter was down below expectations. Consumer confidence down, and the GDP was, pretty solid, 6.42%. So that was strong in terms of growth. But the latest, data points, particularly if you look at the house price index from ING, you can see that that's really continuing to fall from its peak in March, sort of down 10+%. So there is evidence of a slowing economy, and the last inflationary print, you can see that it was, the last CPI print was, let's just go down to it here, was at 7.2%. So it hasn't continued to surge higher. So in the absence of surging inflation, that's sort of around that sort of topish area, 7.3 print and a 7.2 and another 7.2. So it looks like inflation is topping out. Now, in terms of the seasonals, what to look for is if they're more dovish. So if they hike by 50 basis points but indicate this is the final hike, or that they're going to be slowing down and they start revising the expectations. And we have seen some investment banks revising lower their projections for the RBNZ. So if we see that, then look at this seasonal pattern for the Aussie-New Zealand dollar pair. You see it tends to gain 73% of the time between 23rd of Feb and 11th of March. So there is a seasonal case for Aussie-New Zealand dollar strength. So if the RBNZ are more dovish, maybe they hike only by 25 basis points, that would be very dovish. Or if they hike by 50 basis points and give their forward guidance as less aggressive, or saying they're close to terminal, something like that, then you could see the New Zealand dollar weaken. If you look at the New Zealand dollar on an index level, you can see we just sat around this support 84.80 region. So, if that breaks lower, that would be a significant move. Pretty firm support there, that is now for the New Zealand dollar, but definitely something to be looking forward to. The Aussie-New Zealand dollar currency pair, you can see the Aussie 10-year, New Zealand 10-year bond yield spreads pushing lower, which is kind of indicating that price wants to move lower. But obviously the bond yield spread is impacted by interest rate expectations. So this, of course, could be all change should the RBNZ turn out to be, have a different perspective. So if they are very, very dovish, then we could see the Australian 10-year bond yield gain higher and more quickly than the New Zealand 10-year bond yield, and that would push the spread up, and that would also give a bias for Aussie New Zealand dollar upside. Just be aware of that dynamic 200 exponential moving average price just sort of trying to stay above that. That's obviously major support to the downside. That's just a way of getting ready for this. Do turn up to our Wednesday workshop where I will run through the aftermath of the RBNZ decision and see if there's any swing trading opportunities that have come up from it.